Welcome, Savvy Savers, to our enlightening video titled 15 Money Wasters That Poor People Spend Money On. In this video, we'll be exploring the common financial mistakes that can leave you struggling paycheck to paycheck, even when you're earning a decent income. We'll guide you through the pitfalls of lifestyle inflation, unnecessary subscriptions, impulsive shopping, and many more. So buckle up, stay tuned, and let's dive deep into these money-draining habits. By the end of this video, you'll have the knowledge you need to avoid these traps and take control of your finances. Let's get started with our first point, something we've all been guilty of at some point: lifestyle inflation. What's the first thing that often leads people down the path of financial struggle? It's lifestyle inflation. This sneaky culprit sneaks in when you start earning more money. Instead of saving or investing that extra income, you might be tempted to upgrade your lifestyle. You might buy a bigger house, a fancier car, or start dining out at expensive restaurants regularly. These upgrades can quickly drain your wallet. Remember, a bigger house or a fancier car doesn't necessarily mean a happier life. The second money pitfall is unnecessary subscriptions. We're talking about those streaming services, gym memberships, or magazine subscriptions that are quietly draining your wallet. It's easy to forget about them, but they can add up, costing you hundreds of dollars every year. It's a good habit to regularly review all your subscriptions and cancel those you hardly use or don't need. So, it's time to say goodbye to those unused subscriptions and hello to savings. Next on the list is impulsive shopping. This pitfall is all too familiar. We've all been tempted by those flashy sale signs, convincing ourselves we're getting a bargain. But let's be real. If you're buying something you don't need, is it really a bargain? The key is to differentiate between wants and needs. Create a shopping list and stick to it. This way, you'll avoid those impulsive purchases that can quickly drain your wallet. The next time you see a sale, remember, if you don't need it, it's not a bargain. Number 4 on our list is buying brand names. It's not uncommon to get lured by the prestige of well-known brands, but here's the catch. Often you're shelling out extra cash just for the label. Many times generic or store brands offer similar quality at a fraction of the cost. So the next time you're shopping, consider opting for these alternatives. You might be surprised by how much you can save. Remember, a label does not define quality. Moving on, we have eating out too often. A common pitfall is the allure of convenience and the perceived luxury of dining out. These meals out can quickly add up and become a significant expense. On the flip side, preparing meals at home is not only a healthier choice, but also a more cost-effective approach. It allows you to control your portions, know exactly what's in your food, and save a substantial amount over time. Cooking at home can be both healthier and lighter on your wallet. Another common mistake is ignoring financial education. This oversight often leads individuals to miss out on opportunities because they lack the knowledge to make informed decisions. Understanding how to invest wisely, save effectively, and manage debt responsibly is crucial for financial stability and growth. An investment in knowledge can pay the best interest. By educating yourself about financial matters, you can turn your financial life around and start building wealth. Remember, knowledge is power, especially when it comes to finances. One major financial risk is not having an emergency fund. This is a stash of money set aside to cover the financial surprises life throws your way. These unexpected events can be stressful and costly. Here's where an emergency fund comes into play. It's the buffer between you and the unexpected, ensuring that you're prepared to face life's uncertainties head-on. Remember, it's not about if something happens, but when. An emergency fund is not just a safety net, it's peace of mind. Next, we have rent-to-own schemes. These are agreements where you rent an item, usually furniture or electronics, with the option to buy it. The catch? You'll often end up paying several times the original price. It's like a financial vortex, sucking people into a cycle of never-ending payments. The allure of immediate possession can be tempting, but the long-term cost is rarely worth it. So, when facing a rent-to-own proposition, tread carefully. Remember, if it sounds too good to be true, it probably is. Another dangerous financial pitfall is payday loans. These loans may seem like a quick fix when you're in a pinch, but they often come with sky-high interest rates, which can be like stepping into a financial quicksand. The more you struggle to pay it off, the deeper you sink into the debt. Before you know it, you're caught in a vicious cycle of borrowing just to pay off the previous loan. Avoid payday loans. They're a temporary band-aid, not a solution. One risky behavior is neglecting insurance. It's easy to think that won't happen to me, but life has a way of throwing curveballs. Insurance, whether for health, home or car, is a safety net that protects you from unexpected expenses and catastrophic losses. Just imagine a medical emergency without health insurance or a house fire without home insurance. The costs can be overwhelming, potentially leading to financial ruin. Insurance. It's the best umbrella for a rainy day. Lastly, we have not budgeting. It's like setting off on a journey without a map. Without a budget, it's all too easy for your finances to go off course. It's essential to take the time to plan and track your income and expenses. It's not just about cutting back, it's about making the best use of your resources. Remember, budgeting isn't about restriction, it's about freedom, the freedom from financial stress. A budget is telling your money where to go instead of wondering where it went.